Good morning, everybody. It's Christian from Serene Education with the 4 Majors and Notes update for the 10th of April 2013. Hi, folks. Hope you had a fantastic day yesterday. A lot of movement on some of the pairs, and in particular, the euro. Just looking at the daily, we had a lot of upside movement eventually. A bit of a procrastination in the early morning, but however, going through into the US session, we had that upside movement yesterday. And most importantly, I said that we needed to see price maintain above 1300 for the remainder of the day in order to see price building. Now we have two parts to our candle setup, which is we need the 4 parts in particular. We have 2 of them. The 4 parts are to see, in this case, a blue arrow, blue candle, and the histograms on our side to go blue. We have the 2 of them. We have the blue arrow and the blue candle, and we are trading above a major support and resistance level in the shape of the 1300 mark. Price is now come unstuck just under the 50 period moving average on our daily, which is not too far away from where the next price support and resistance level is at the 1500 mark. You can see quite a lot of consolidation here over the past couple of months, and we have to be aware of that. The most important thing is price is maintaining above 1300. So intraday, we should be looking for buying opportunities to the upside. And if we do get a nice break and close above this consolidation high here, you can see that price has not really made any more ground since yesterday's movement. So as it stands, we know that there is consolidation at that 1500 mark, so we need to make a note of that. There is still scope for movement to the upside. There is still some room to see price moving higher. You can see there's a consolidative range here, price support and resistance here at 1300. So as long as it maintains on this course, then look to see on the hourly or the 30-minute for a breakout. You can see on the hourly here at 1305 mark, great, happy, and you can see that price has consolidated over the past couple of hours at roughly the, what do we have, 6, 7, 8, 9, 10, 1310 mark. Get above 1310 and we could see price moving to that all-important 13500 mark. So just got to bide your time. Wait for the breakout over here. Bullish engulfing candle would really give us that. Look for stop placement and look to target the upside towards those areas as I mentioned. Sterling against US dollar. Let's have a look at that daily. Bullish engulfing candle doing exactly the same. We were a bit speculative yesterday because of the fact that the prior day had actually seen a bearish candle. Friday's movement up, however, not really taking any of that on Monday. And subsequently yesterday, we saw price moving in the opposite direction. So there's genuinely a reason why sterling is still wanting to move high on this particular pair. And the longer it spends above the 15300, then there's more likely for price to build on that. So again, we are above the 15300. Again, we need to now look at our 4-hour and our hourly and intraday to make sure that price maintains above this level. Okay, so you can see price is now trading above the 15300. And there seems to be more blue than red, which was a blessing because you can see quite clearly price is moving higher. We are trading above the institution, but the most important thing is we are trading above that 15300, which is that major support and resistance level. As long as we maintain above 15300, there's more likely for price to head higher. At the moment now, our first port of call or our problem that we've got to worry about at the moment now is this resistance level at 15300. Get above that, then we are pretty much into cleaner air. Because you can see quite clearly we had a consolidative range too, and we don't want to be trading or speculating into that range. You can either trade quite aggressively into these highs. However, in my case, being more passive, I'd rather wait for a nice clean break above 1335. It'll give me that added benefit sentiment that price is definitely wanting to go higher, and that's the case. Then I place my order and stop and look to the highs that we see above. So you can quite clearly see, if I go back to my daily, you can quite clearly see there's not much in the way until we head towards those prior support and resistance level, roughly around the 1575, 156500 mark. So there's a lot of more clean air once we break above that 15300. So I don't mind biding my time. I've already placed a trend line alert for price to break above that 15300 on my 4-hour candle. Once I get that, then I'm going to start looking for longs, leave the rest up to money management. US dollar Swiss franc. Spoke about this one failing yet again at 940, a major support and resistance level. You can quite clearly see through most of March and into April, very strong support, and we're above the institution moving average. And hence the reason why for a prolonged period of time through that period, we saw blue across the board and we should be looking for buying opportunities. However, when price broke above the 940 recently, we wanted to see price actually finding support and then moving to the upside. That failed to occur because we saw price at the latter part of March reattempting those highs previously. However, sentiment not really moving with it, and subsequently we saw price failing miserably. But moving back towards the support, we'd expect it to bounce like it did on 2 prior occasions or 3 prior occasions. However, it did not. It fell to and it broke straight through it. And now what it's done now is seen price trading to the downside, and in doing so testing the 930, which happens to be a major support and resistance level on our weekly and monthly time frames. In black tells me it's a fib ratio from a major high and low on my monthly chart. So at the moment now, in order to see any further selling, we need to get below that 930. There's far too much risk at the moment now to be trading into this. Rather wait for a nice clean break below it, and once we get that, then we can see we have genuine target levels over here roughly in the 910 mark. Nice clean movements. Yeah, there's a lot more cleaner air down here below this 930. The longer stays above 930, the more likely we're going to see price moving higher or bouncing or retesting or reattempting to head towards that 940 mark. So as of the moment now, I've now placed an alert for close, 4-hour close below the 930 mark to give me a signal to look for any further shorts. On my daily, it's still telling me the sentiment is looking positive, and as long as it maintains above this area at 930, there's always a likelihood for price to bounce higher. So on my 4-hour chart and my hourly, I've now placed an alert below my 930 marker. You can quite clearly see I've put my notes on. You can see there's another fib ratio here intraday, also at 931. So there's a lot of support below price. You can see over the past couple of days, price has failed to actually break this and now forming support. So rather wait for price to close below 90 to confirm that sentiment is still looking negative, and then we can start to look to target the downside. I do not want to speculate, so I don't want to enter now to the downside if I'm trading into a major support level intraday. There's a lot more red, so that's great. Everything's above me, fantastic. The only thing that's not in my favor at the moment now is this consolidation support here at 930. Get below that, then I should be looking for nothing more than shorting opportunities for the foreseeable future. On to the last pair of the day, the US dollar Japanese yen. Let's have a look and see what's been happening on the daily. A lot of movement against the cross pairs for the yen. Yen has really taken a beating over the past couple of months, well, as far back as October of last year, and the US dollar has rallied. What it's done over the past couple of days is we've seen a rally, a nice bearish, a bullish engulfing candle, close above the 96.50 here, has led to seeing price moving higher and targeting the 100. The 100 mark is a monthly and a yearly fib ratio. I tend to look at the bigger picture, guys. It's so important. This happened over here, exactly the same thing on the 94 mark. This is a yearly and monthly fib retracement area, so there's 2007 highs to the 2011 lows, and you need to know about that because it would have saved you a lot of time and effort, because you can see quite clearly price didn't go anywhere once we got to this level. So very, very important. Now that we got above 94 and we're heading higher, it's going to move to our next level, which is this 50% retracement area here in the shape of the 100 mark. And now clearly consolidation is taking place. Spinning top yesterday, very indecisive as we head into this major support and resistance level high, and it will maintain to now to consolidate until such time as we see price breaking higher than that. So if you're looking for any buying opportunities, there's clearly nothing to buy on the US dollar Japanese yen at this time because we're trading into a major support and resistance level. So on our intraday, we want to see price breaking higher than that. You can quite clearly see price has actually failed at the 99.50. So people are actually getting out of this trade well before it's even got to their target. They want to be able to head into these major support or their target areas. I can guarantee anybody who actually went long here through the break over here on the, what was that, the 5th of the 4th, looked at 95.50 as their ultimate target, because you don't want to be carrying all your risk with you as you head into a major support and resistance level. You want to be taking profit as you head up. So moving higher, taking 25, moving higher, taking 25, moving higher, taking 25, moving higher, and taking everything off the table. So now they've got nothing, no risk. They're trading risk-free now, all profit, and subsequently price is now moving sideways because of that. So now it's got to do a lot of work now to get above this 100 now, because you've got to have to try and get everybody on your side, i.e. on the ball of trying to get above that psychological fib ratio and support and resistance level in the shape of the 100. Nice round number as well. And you can see a lot of indecision now on this 4-hour time frame. A lot of dojis. Okay, we don't trade indecision, we trade decisiveness. And that decisiveness has to come from a very bullish engulfing candle getting us a close above 100. Otherwise, we're just going to be speculating. We don't speculate. Okay, so look to see, rather be patient, rather look somewhere else until such time as price is trading higher. If this movement is genuine and has been for the past 5 months or so, it will get us above that 100, no problem. But wait for it to get us above there so we can move with the big guys. The institutions are moving price. Perfect. That's what we want. So rather put an alert on the US dollar Japanese yen for a confirmed close above the 100. Ideally in this case, because it's a major support and resistance level, I want to see a daily close. So get above that, then I'm looking long for the foreseeable future. The only other option would be to see a close lower than this consolidation low here, the support low that we've seen over the past couple of days. There we go. Let me see if I can actually extend that. Well done. So we're looking at the 98, 6, 7, 8, 9, just below the 99 here. Get below that, then there's more likely for price to consolidate. And then if that's the case, look to target intraday to these lows over here. So you can take this support level over here as your floor to your current high, and you can see the 23.6. Get below the 23.6, which is the 20 period moving average. Then you can target the 38, the 50, and subsequently back to price support and resistance levels here at 61.8 as your targets intraday. Okay, very, very important. Otherwise, because you'll be trading against market sentiment. Okay, as you can see, the intermediate trend is still high. You can see where price is trading now. If you look at where the trend line is trading on, or the trend line is marking on our 4 time frame. So if you are going to be shorting, you're going to be shorting very aggressively because we are very much in a very strong uptrend. Okay, so in my eyes, I'd rather wait for a nice break above the 100. Or another scenario is get a bearish engulfing candle over the next couple of days, and then I should be targeting major support and resistance levels to the downside. Just bring up the hourly chart just to show you the consolidative range. You can see the highs are getting lower. Not a lot of momentum. You can see the candles over here a lot bigger, a lot fuller, a lot more decisive. Now we've got a lot of indecision, a lot of spinning tops. You can see very small trading ranges as we head into this very strong major support and resistance level in the shape of the 100. So we're going to see a lot more speculation, a lot more smaller bars, a lot of indecisiveness, which leads to consolidation. We don't want to trade consolidation because we're not making any money. So we want to see a break of 100 or break of this area here, this consolidation area, and then we could target back towards the institution area, back towards this 9600 mark here as our first target, or look to target those areas as I mentioned to you on the Fib retracements. So there we go, 23, the 38, the 50, the 61, etc. Okay, that's it for today, guys. Hope you have a fantastic trading day. Please look at any news to see if there's anything out there that's going to move the market. We have the FOMC meeting this evening for the US market. Not much else. We got the French industrial production month-on-month figures this morning. Not really one's going to move the market a hell of a lot, but I'm sure there's some underlying other things. We've got a lot of news for the US market this afternoon. Crude oil inventories, which is quite an important one for companies out there. The more oil companies are actually stocking, the more likely production's on the up. If they're stocking less oil, that means that there's no production, and we've seen contraction on the production side. So that's also quite an important one. Then we have federal budget balance figures for the US market. So there's a lot more US data that we're looking for, and that could reflect quite nicely on the US Japanese yen. So come out with really bad figures for the US market later this evening, and we could see more resistance at the 100 and potentially shorting opportunities for the foreseeable future. If the news comes out quite positive for the US market, then look to see if price is actually going to be reattempting that 100 mark quite soon. Okay, so very, very important looking at the fundamentals. Other than that, if you are trading the Serene Education template, please back it up with sound money management. Guys, it is a great template, but if you don't apply stringent money management rules to it, it's worth nothing. Okay, other than that, keep it simple. Make sure you plot your major support and resistance levels and use them as guidelines, okay? Because everybody out there is going to be using exactly the same thing. If you can see what they're doing, that means you're going to be more profitable and you're going to be more decisive in your decision making. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.